and the property that they are about. Cool, being recorded. So whenever someone's buying a house, it's one of their most expensive purchases that year, most likely, and they want to know what's going on. Does the foundation have a bunch of cracks? Is the roof leaking? Will the water heater fail? Things like that. And we're able to go system by system to inspect the property, give them a detailed report of what's wrong with it, what's good with it, the house, as well as to help educate them, show them where their main water shutoff is in case of an emergency, show them how to turn off the breaker and reset it if something goes wrong or they need to change a light fixture out. We're able to help them by guiding through those processes. And we follow a national standard of practice and a state standard of practice that says these are the things that are covered in a home inspection. These are the things that are excluded from a home inspection. We don't look at the color of the paint on the wall and say, that pink room has to get repainted. We're looking for the more factual based items in the house to better help you budget and plan. Many people will use our home inspection reports to negotiate with the seller of the home to get things repaired or money off the price, and so that the house is the value, the amount they're paying for the house is the actual value of the house after repairs or before repairs. I like helping people. You can see that I serve on a couple national boards. It's fun. It's great, and by having a home inspection license, I'm able to help those home buyers to get to their goal of home ownership. I'm not really long-winded, so there's my 2-minute spiel.
All right, Mary Claire. And our next speakers today are Brian and Danielle Dewberry. They are with Mission First Mortgage, and they were the 2021 NAPIA Award winner for Best Mortgage Broker Firm. Brian was born and raised in Mobile County, a U.S. Marine veteran, Troy University graduate, and mortgage broker for 5 years now. Danielle is a Troy University graduate and classroom educator for over a decade before joining her husband, Brian, as a mortgage broker. She transitioned her communication skills, her love of people, and affinity for relationship building from the classroom to the world of lending. If you're looking for a friend on your journey to homeownership, she and Brian, along with their best girl, Sadie, are happy to walk beside you. I do wish Sadie could be here today. You guys will have to talk about her as well.
Yes, absolutely. She's asleep on the floor. And I do have to mention that although we're Troy graduates, we do have season tickets to the Jags. So we support local.
We do.
Yeah, see, there you go, Doug. Thumbs up. Go ahead.
So we are, as you mentioned, a veteran-owned award-winning wholesale mortgage brokerage. And where we differ is that where most lenders, most mortgage brokers have lines with investors, we have a wholesale line with them as well. So we can offer a little better rates, a little better products. And we oftentimes have offshoot pricing due to the amount of volume that we send to them. So I think one thing, or a couple of things really, that set us apart from most brokers is the fact that we do have the wholesale line. We are very relationship focused as opposed to transaction focused, and we communicate. We are happy to talk to our clients, to the realtors, to anyone who's a part of the deal, because we do feel like communication is key. It's essential. If you don't communicate with folks an expectation or a timeline, then no one can know. So we do pride ourselves on communicating often and clearly with our clients and our realtors. And Brian, if you want to go ahead and tell a little bit about mortgage officer.
Yeah, so we had some talking points here we wanted to go over, and the first one we were given is, how do I find a mortgage loan officer? Well, first you go to missionfirstmortgageinc.com. That's the first place. Or you can do a Google review. Google's a really handy tool for that. Or Yelp. You can find reviews and you can see if you can work well with somebody. And it's always good to shop it around. Talk to a bunch of different people. Personalities are going to differ. People may or may not understand what you're looking for, or they may not be a good fit. So just really, I would say shop it around, because there's even people that may not work well with us. And we would definitely help refer them to other people, but we always want to try to do the best for everyone.
One thing we get asked about often is credit and how credit affects the buying process. So, of course, a person's credit score is key. It helps us determine whether or not they do pre-qualify. It helps determine the type of program they qualify for, and it also helps determine their rate. It's a factor in quoting the rate to them. So credit is key in being able to purchase a home. If we have a client come to us who has credit that might need some addressing, we help them with those issues. We set them up on our plan. We give them a timeline for what that plan looks like, how long it will take to achieve a credit score that's going to pre-qualify them for a home. So even if someone comes to us and their credit is not where it needs to be, which is typically around a 640 or higher, we do work with them to get them to that point. We never turn anyone away.
Yep. And people always ask, when do I need to get pre-approved? My simple answer would be as soon as possible, even if you're really not serious about purchasing right now, but you will be in the future. And we can set up a credit plan, like Danielle says, to set you up for success a year, maybe even 2 years out, so that you can know definitively that when you get to that point, you will be able to afford a home and that you'll have the best chance of getting that home and getting it through underwriting.
Another question folks have for us oftentimes is how much should they bring for a down payment? And we always tell them as much as possible. Really, depending on what type of program and whether they are a first-time home buyer or not, that can help set the guideline for what they'll be required to bring as a down payment. There are some first-time home buyer programs that will offer them the ability to bring either 0% down, 3%, or 3.5% of the sale price. There's also a down payment assistance program through the city, and we're going to be on a call with them next week to get a little bit more information. We've not had the opportunity to work with them in the past, but we are interested in being able to afford that to our clients as an opportunity. So really, down payment just depends on what program they're going to go with and whether or not they've purchased a home before.
Yep. And the traditional loan programs are basically VA, which is available to veterans that are eligible, USDA, which depends on the property location. And we've got a lot of USDA eligibility in our area. We also have FHA, which is a government-backed first-time homebuyer program that we'll go over a little bit. And then there's also conventional that's underwritten to guidelines either through Fannie Mae or Freddie Mac. And that can be for a first-time home buyer, but also is where investment properties and so forth are purchased.
And the FHA loan is one specifically that we do with a lot, just because it allows clients to come in as a first-time home buyer with a little bit less down. And also the interest rates tend to be better than traditional products like conventional loans. And FHA is with the Federal Housing Authority, and it applies to HUD guidelines, or it's founded under HUD guidelines. So with an FHA loan, a client is allowed to have a debt to income ratio that's a little bit higher, have a down payment that's a little less, have an interest rate that's really good. All those things factor in to an FHA loan. It can be a 30-year fixed product. So it's a great loan. And we often use that with our clients who are first-time home buyers. And
the underwriting's typically a little easier. And most of your first-time home buyers, when they're purchasing the first time, it's not going to be their forever home. So this is really the best entry product, I'd say, for 90% of the people out there. And then as far as Sadie's concerned, she's my service dog. For those of you who may not have met her,
she's our employee of the month every month.
She's a yellow lab. She's actually got an Instagram if you want to follow her. It's Sadie the Service Dog official. She's a yellow lab and she's on the floor. We can't get her up, but we don't let her do any math.
But she is our closer.
Yeah, she's our closer. So, but that's about it. That's what we have. Or unless y'all have any questions.
I think we'll keep going through, and then anyone who has questions, and I think we've kind of written down a couple, we'll ask them at the end and tie everything together, all 4 categories today. So our next speaker today is Ivy Thompson. Ivy was the 2021 NAPI Award winner for Mobile Area Best Residential Realtor. Ivy is a Mobilian of over 25 years and a top producing realtor with Roberts Brothers Real Estate. Ivy Thompson enjoys volunteering with various civic and social groups dedicated to giving back to the Gulf Coast. A resident of historic Midtown and lover of historic properties, Ivy currently serves as a commissioner and public relations chair on the Mobile Historic Development Commission. Ivy also currently serves on the Mobile Area Association of Realtors Board of Directors, Community Relations Committee, and Affiliate Council. She is the 2021 chair of Mobile Area Association of Realtors Governmental Affairs and has served as the state level on the Board of Directors for the Alabama Association of Realtors. Ivy is an active member of the Junior League of Mobile, a certified tourism ambassador for the city of Mobile, and a graduate of Mobile United's Leadership Mobile class of 2020. Ivy is also the recipient of the 2021 NAPI Award winner for the Mobile Area Best Residential Realtor. In her spare time, Ivy enjoys gardening, cooking, entertaining, and enjoying all of the beautiful amenities of the Gulf Coast has to offer.
Thank you, Haley. So I've got a few talking points as well. As far as finding a realtor is the most, or one of the most important steps. And you may ask, how do I find the perfect realtor? A lot of people deal with referrals as far as finding a realtor. Chances are your family, some close friends have dealt with a realtor that they really, really like. Part of the realtor buyer, realtor seller is cultivating that relationship. So oftentimes, you know, most of my clients are repeat clients, referred clients. You want to get an experienced realtor that is well-versed in the different markets. The market changes wildly. You can have a seller's market, you can have a buyer's market. Right now we have very low inventory, and you really need a good realtor that can kind of think outside the box for you to find the perfect home, because chances are it may not be on the market. So you need someone that is skilled and can do that for you. That's why it's also important to cultivate a relationship with one realtor, because whenever you do that, that realtor knows your wants and needs and can advocate for you in negotiations. So that's very important. The basic process of buying a home, first and foremost, I know Danielle and Brian kind of touched on this, you really need to get pre-approved. If you don't have a lender that you know of, your realtor can set you up with one. But it's very important to do that, because you can sit down with your lender and tell them, you know, kind of what you're thinking, and they can look at your credit and your finances and everything and let you know how much you can spend on a home, and make sure that those payments are comfortable for you, and also discuss the different programs that are available to you. So that's very, very important. Once you get that, also in this market, the sellers aren't really looking at any offers without having a pre-approval letter. So that's very important to have that in place as well. So once you get all that squared away, the fun part starts. That's the shopping. You are going to sit down with your realtor, tell them, you know, what you'd like, if you want a swimming pool, if you want to live in a particular neighborhood, how many beds, how many baths, all of that stuff. And he or she is then going to find properties that they think you will like. They'll email you properties, text you properties. You can do the same. You can be looking online at the same time if there are any that you think your realtor has missed that you'd like to see. And then you're going to kind of choose from those and make in-person appointments. So your realtor is going to make an appointment with the listing agent, and then you're going to go look at the different homes, do a tour of homes. That said, if you have many homes to look at, I would strongly encourage you not to look at more than 5 or 6 a day, because when you do that, if you look at more, it's all just going to be a blur, and you're really not going to be able to remember what you've looked at. So you need to kind of break it up. And it's good to narrow it down to 2 or 3 in the top. And there's nothing wrong with having a second or even third showing if you need to, you know, to kind of break that tie. You can also you know, request to do that. Then whenever you settle on your perfect home, you're going to write an offer. Again, your realtor is going to need to be skilled in negotiations, especially in this market, to be able to do that. There are going to be a couple of things that are on their contingencies. One of them is going to be your lending contingency. Again, hopefully you've already spoken with a lender and they've gotten that underway. Another one's going to be your home inspection that Mr. Doug talked to you about. You're going to have X number of days. It's usually 5 to 10 business days to get that done. And he's going to get under the house, on top of the house, around the house. He's going to tell you everything that's wrong with that house. You'll get a 30 to 40 detailed report with photographs. I know Mr. Doug has done some inspections for me before, and it's a lot to look at, but don't let it freak you out. He's there to let you know everything that's wrong with the house. Some things you can live with, some things you can't. And you can always, as he said, ask the seller for those repairs. Once all that's out of the way, then your lender is going to order the appraisal. The appraiser is going to come out and appraise the home to make sure that it is it appraises for the amount that you're borrowing. And then after that, you proceed to close. And we have the 3 happiest words that your lender can give you, and that's clear to close. That means everybody goes and sits down at the closing table, signs the documents, and you get the key to your brand new house. Another thing you probably want to know is, oh my gosh, I'm a first-time buyer. How do I pay my realtor? The good thing for buyers is Most of the time, the seller pays all of the realtor commissions. So we actually are free to buyers most of the time, traditionally. So realtors are very unique in that all of our services are provided upfront. We don't get paid for anything until the closing occurs, and then we are paid commission, again, traditionally by the seller. As far as out-of-pocket expenses, you are going to give some earnest money upon acceptance of an offer. It's usually $1,000 or so. It can vary, but that's a pretty good amount to expect. And whenever you do, that is going to go into escrow and is going to be held until closing. And whenever you go to closing, it comes off of the purchase price. So it doesn't just go, somewhere. It's applied to the purchase of your home. Also, whenever you pay Mr. Doug or someone to do an inspection, that is an out-of-pocket expense as well. That is not rolled into your loan. That is you paying your inspector for that. And those costs, kind of vary with the inspector. It's usually based on square footage or something like that. But again, it's very, very important to have a good team in place. I've worked with Mr. Doug. I've worked with Danielle and Brian. In fact, fun fact, they did the mortgage on my personal home. So everybody here is just great to work with. And I think that's all I got.
All right, thank you very much. Before we introduce our last speaker, I wanted to remind everyone that the chat box is open. So if you have any questions you think of, feel free to go ahead and put them there. And then if you would like to ask directly, that's fine. We can open it up at the end as well. So our last speaker today is, oh, hang on, my screen's very small. Mr. George Oswalt. George graduated from the University of the South in Sewanee, Tennessee, with a degree in English. He began his insurance career with Willis Towers Watson in Nashville, Tennessee. While in Nashville, George became a certified insurance service representative and an associate in risk management. In 2016, George moved home to Mobile and joined Lyon Fry Caden Insurance Agency. His areas of focus include commercial property owners, high-value homeowners, and growing businesses. He earned his Certified Insurance Counselor designation in 2020. George is involved in the Senior Bowl Committee, the Mobile Touchdown Club, the Port of Mobile Propeller Club, and he is a member of Government Street Presbyterian Church. In his spare time, George enjoys spending time with his family in Gulf Shores or Point Clear.
Hi, I am glad to be here with y'all. I am a producer at Lyon Fry Caden, and Lyon Fry Caden is an independent insurance agency, which means that unlike the State Farms and Farms Bureau of the world, we represent dozens of carriers so that we can tailor a box to fit you rather than fit you in a box. So the world of insurance is kind of separated into two. You have life and health and medical and disability over on this side. And then what I do is property and casualty. Casualty is just another word for liability. So your homeowner's policy is going to have components of property and liability. And I'll walk through that in just a minute, but wanted to also point out that where I fit in this puzzle is usually after you have come under contract with your house with Ivy and you're starting to move towards the mortgage process or towards the closing process rather. So what I would encourage you to do is reach out to someone like me as early as possible for a number of good reasons. Mobile and along the Gulf Coast is the hardest market in the property insurance world right now. I actually went to Charleston recently and they were not even close to how hard we are. And when I say hard, what I mean is that coverage is expensive and it's because of hurricanes. And so we have separate wind deductibles. I'll also get to that in a minute. But I just wanted to point out that it's important to have a relationship with a insurance agent through that process that Ivy was describing. We are also a relationship-based business, so it's not just a matter of buying the cheapest thing possible. It's a matter of understanding the ins and out of your home, which Doug can kind of help you narrow down and understand more thoroughly, but also all those can go. I will ask about those and collect all that information for a submission to our best carriers to provide quotes that we then compete against each other to present the best option to you. So the goal is not the cheapest, the goal is the best coverage for the best premium. And so taking a step back, let's talk about the insurance product of what it is. Some people like to say that insurance is a commodity. You're buying a promise, you're buying a contract. So it becomes a product at a claim. That's when you actually get rubber meeting the road. Promise that if something happens, the insurance company is going to make you whole. We're not going to make you better off, and we're not going to leave you in the dust, but we're going to make you whole. We're going to build back with replacement quality of what you had. So moving into the actual policy itself, every homeowner policy is going to have the same components, and those components are a dwelling limit. That's the actual limit of what it would take to replace your home with similar quality materials. And then you have other structures, which is like a guest house or a garage or a shed. And then you have, it can also be fences and driveways and things like that. And then you have contents. And what I like to say is, imagine taking your house and dumping it upside down. Everything that falls out is considered contents. And then you have loss of use. If your home is damaged to the point that you can't occupy it, this coverage can help pay the mortgage while the home is being rebuilt. It can also help you rent somewhere else if your family needs to be put up somewhere. And then moving forward into liability, everything I just described just then was property. It's finite. You can put a number to it. You can measure it. Liability is harder to measure because liability coverage is for your liability to a third party for their bodily injury and property damage. So it's not your property, it's theirs that you might be liable for. And so it's harder to put a finite amount on that, which is why you see limits of like 300,000. We don't really do anything less than that. $500,000 is really where you want to be, and you want to buy an umbrella, which we can talk about later if y'all have some questions about that. And so that's the homeowner policy. And so it covers things like fire and theft and lightning and vandalism, and of course, wind. So that kind of brings us to the deductibles. In our area, we have separate wind deductibles. So if you imagine all those perils, all those causes of loss on a spectrum, you have fire and theft and lightning over here. But as you get this way, you get into wind. You have wind and hail, and you have a named storm, and you have a hurricane. And so if you have a percentage deductible for wind, which in our area you will, unless your home is brand spanking new and fortified and free from any of water. But typically what we see is a separate wind deductible, and the best you can get is 2%. And then there's 3%, and then there's 5%. We don't really see much over 5%. But what that is, that's a percentage of your home limit. And so if you suffer a claim from a fire, your deductible is going to be like, let's say $2,500. But if you suffer a claim from a hurricane and wind damage, then your deductible is going to be a percentage, let's say 2% of your $500,000 home. It would take $500,000 to rebuild your home. So your limit is $500,000, and that 2% is applied to that. So if you suffer a loss from a hurricane, your deductible is $10,000. And a lot of people understand that when they're buying and shopping for a house and for policies, but come hurricane time, they get kind of a rude education on how that really works. And that's what Sally was last year. Sally was a bad storm, but there weren't a whole lot of claims that were above their deductible. or at least not far enough above their deductible to make filing the claim worthwhile. A lot of times you had a tree leaning against the house, but it didn't really like cause all that much damage to the house. So be aware of that, understand that, make sure that your agent explains that and try and remember it. And your agent should always give you a copy of your policy. You can get proof of coverage that we will send to your mortgagee. And then we might talk about this later more in questions, but I wanted to point out that part of the home buying process is I'm gonna ask a question like, are you gonna pay your insurance premium through your mortgage? And you don't always have to do that. A lot of mortgagees, they encourage you to do that. And it is probably a very good idea. It is basically interest-free financing. And the mortgage folks can definitely talk more about that. But what I explain to people is that if your insurance premium is going to be paid by your escrow account as part of your mortgage, then it's basically like a bucket. You're going to fill up that bucket with each payment over time. And at renewal, the insurance company is going to bill the mortgage company, and they're going to empty that bucket and pay that premium for you. And then you start filling it up again. So I can answer more questions about that later, but I did want to mention that. And then last thing is inspections. You're going to do a home buying inspection, absolutely. And then after you place the insurance coverage, they're going to request or require a inspection. They'll do it, they'll pay for it, and they'll communicate with you. And really what they're doing is they're just coming to make sure that they are insuring what we told them they're insuring. So if we told them they're insuring a 4,000 square foot house that's worth $1 million, and they get there and it's actually cinder block 2,000 square foot home on concrete blocks, they just want to make sure that they're insuring what we told them they're insuring. So that's not a super invasive inspection, but they will do it again. And things they find big time are like limbs hanging on roofs or handrails on stairs, and then other little things here and there, like roof age. Roof age is a big one because of the wind exposure we have in this area. So I could go on and on and on. We didn't even really talk about markets. We didn't really talk about carriers and brokers and how all that works together. But just like any market, it fluctuates. And so getting a good agent for your insurance is just as important as any other phase in this. So I'd be happy to answer any other questions y'all have later. So thank you.
Thank you very much. The presenters, if y'all would be willing, you could share your contact information in the chat if anyone would like it now. And then if you're comfortable, we're going to send out the recording after, so we could share it as well if anyone would like to reach out to you with more questions or a consultation or anything like that. And we have a few questions we'll get started with. The first one is kind of a personal question, but should I buy right now? So I feel like this will be more relevant maybe for the Dewberrys and Ivy, but I know we've all heard, whether we've been looking for a house or not, that things have been very, very hot. And I am not currently looking for a house, but from my perspective, it seems like more inventory is becoming available and it's staying available longer. I haven't heard much about interest rates in the past month or two, but what is y'all's input on that?
I'll let Ivy speak on the market specifically, but what I would tell people is, I'm not going to pretend to tell you when you think you should buy a house. Our goal is just to make sure you meet the guidelines and that you understand what you're getting into. So by all means, if somebody's wanting to buy a house, then that's a personal decision they need to make. And between us and the realtor, I would presume they're going to do some kind of cost benefit analysis on their own and say, you know what, I really want this home. And it really is a personal and emotional thing, especially when it comes to residential real estate. Ivy?
I would agree with that. I also think that yes, there is limited inventory right now, but it is getting better. We're seeing more and more houses on the market. Also, interest rates are at, I believe, a historic low. Isn't that right, Brian, right now?
They're still historically low. They're not as low as they were, a few months ago, but they're still great. the affordability on houses right now is fantastic because of those
Yes.
rates.
It's still a great time to buy. I know when I bought my first home in, I think it was 2004, my interest rate was like 8% or 8.5%, something like that. So
Yep.
the interest rates are great.
They
Yeah,
are.
we're consistently in the twos
Yeah.
right now.
Another question, and this probably will be for Doug and Ivy. If something comes up during the inspection that is to a point of concern that I don't know if I'm still comfortable moving forward, is there still an opportunity to back out of buying the house? And if so, are there things you see that people kind of would make that decision on? Like, is there, if it's foundation or roof, are there things you see, Doug, that are more concerning to home buyers than others, or any feedback on that?
I'll start. I'm sure Ivy will chime in. We constantly see big things that cost a lot of money to repair, and a roof or an air conditioner can be some of your bigger ticket items. But each person's going to have their own threshold of tolerance of what they can put up with or money they can put in to make a repair. And so it's not necessarily an item that you need to walk away from the house, but you do, assuming your contract has the contingency, after home inspection, you can go to the seller and say, the house was not in a condition that we wanted it to be in, and we can back out. Is that right, Ivy?
That's exactly right. Typically, though, what you would do, I mean, even if you do have a roof issue or a foundation issue, oftentimes the seller will repair that for you at their cost. So if you're still comfortable in moving forward, and if it is foundation issues, you can always ask for a foundation letter to be provided after those repairs have been made to make sure that that is structurally sound. Now, all of that said, if you just say, hey, I don't want this house, I don't even want to go through all that, then absolutely, you can do a release of sale at that point. That's what a contingency is there for. When something is a contingency on there, you can, back out of the contract if you need to do so.
I think it's important to note that if that's a critical thing with the house, every home buyer is going to find that. Let's just say it's an old roof, and so it's in the seller's interest to get that remedied. And so walking away, the seller's still going to put up with that, and so you want to go ahead and work with that buyer, work with that seller to make that deal work out, because the house has that flaw. Everybody's going to find it.
And that's exactly right. And that's what the listing agent is hopefully going to convey to their seller. Look, this is something that is going to be a concern to any buyer. We have knowledge of that now because of this inspection report. We really need to go ahead and get that taken care of.
Thank you both for that. We have one for George. Does Lion Fry Caden also offer supplemental insurance for valuable personal properties that might be in the home but may not be covered under a standard homeowner's policy?
That's a great question. And like I said, I could go on and on. There's tons of ins and outs that y'all should definitely feel free to ask me now, but also when it comes your turn to buy a house, by all means, make a lot of questions. So to answer this one, every homeowner policy has limitations on high value personal items that they will cover. So these are things like jewelry, furs, collectibles, guns is a one you see a lot that is understated, china, silver. So if you have a piece of jewelry that's valued at, let's say $15,000, your standard homeowner's policy is going to have a limitation on that to the tune of typically what we see is $2,500. So if you have a certain amount of personal high value items that you want to protect, there is a policy called a personal articles floater. We call it a PAF, obviously. And it is actually a pretty remarkable policy. It follows you anywhere. It covers all sorts of perils. There's no deductible, and you can just misplace it. If you just lose your ring, you can file a claim, and they'll pay you the appraised value of that ring. So that is a great policy. Good question. And I think if anybody else has any more specific questions, I'm happy to answer them.
Thank you. Another for the Dewberries. How does a credit inquiry or pre-approval impact your overall credit score?
So
For the mortgage
ahead, yeah.
industry, the credit pull does not impact the credit score as it would if you're going in to purchase a car or to get a line of credit somewhere. So it really doesn't have an impact on the score. It doesn't cost the score to drop significantly. But the credit pull is, of course, an important component, and it allows us to know whether or not we pre-qualify someone from the beginning. As I mentioned, the 640 or higher is what we're seeing that we need for most of the programs we have. With USDA, it's a little bit higher, it's 680. But we do, as I said, we do try to work with folks. If they're not quite there, we set them on a path so they can be there and they can succeed.
And I've seen people that have come to me and they've had 16 inquiries from other mortgage companies, specifically mortgage companies, and the score differential has been 0.
Yeah.
The score that I gave them when I pulled credit was the same. They did it, the first time prior to the other 15.
The matrix for the credit pull is a little different with mortgages than anything else.
Yeah.
Okay, I think we have 2 more questions. One is specifically for Ivy. How important is a home survey of the property from a company like Poly Surveying? Can you access a previous one if you want to save this cost?
Typically, if you're in a neighborhood where there are fences up, things like that, I would say that it's not as important as if you're buying something in a rural area, some acreage, you then might want to ask for a survey at the seller's cost. Now, that said, yes, absolutely. There is a place in our contract where you're not specifically requesting a new survey to be provided at the seller's cost, but we will take an existing one if it's available. And I always ask for that, even if it is in a neighborhood. If they have an existing survey that's not going to cost them anything, we go ahead and request that. But if you're purchasing acreage, I would certainly want a survey.
Okay, and then how much cash should one put down in a home to avoid paying private mortgage insurance each month on their loan?
That's a good question. And in regard to a conventional loan, they would need to put down 20%. When you put down 20% on a conventional loan, that mortgage insurance falls off. It does not exist. With an FHA loan, the mortgage insurance stays on for the life of the loan. So that's a major difference in the 2 programs. For a conventional loan, you can pay off the mortgage insurance or pay down so that it goes away. With an FHA loan, it stays for the life of the loan.
And then there's also so for a conventional loan, there's also a facet of it called a loan recast that can be done later on. And this is for anybody. If you have a conventional loan through Fannie or Freddie, at some point, if you get some kind of windfall and you decide to put a lump sum of money down, you can ask whoever's servicing it at that time to perform the recast after you've made that down payment, and they'll reassess the new principal and re-amortize the whole loan without any fees. And that could be, depending on when you do that, it could make the MI fall off as well.
Right.
But we always try to counsel people, the better your credit score, the better your PMI is going to be on a conventional loan. So that's always, let's get the credit good. Let's make sure the MI is low as we can make it. I'm a huge advocate of, maintaining cash. I mean, yes, you can put the money down if you have it, but, if you don't have to and you can still afford the house, and maybe we can make payments later to within a few years get that MI gone, that would be my suggestion, unless you just know otherwise and you're comfortable with doing that. But I'm always a big advocate of retaining as much cash as possible, unless you've got a plan.
Okay, we've actually had 1 or 2 more roll in. Is a termite bond required to purchase a home in Alabama?
So there's 2 answers to that question. If it's a government loan, yes. If it's FHA, VA, USDA, yes. If it's a conventional loan, the answer is no, unless it's specified in the contract. Ivy, you want to add anything?
Yeah, I'm just going to piggyback on that and say, no, it's not required, but I would strongly encourage any buyer to get one in place. Even if you're purchasing a brick home, there's still wood framing under the brick. We live on the coast. We know termites are a problem, especially the Formosan ones. Go ahead and get a termite bond. If the seller doesn't want to pay for it yourself. Get a termite bond with a Formosan rider.
Okay, and this will be the last question. Say I recently filed for bankruptcy. I'm married, but my husband was not included on my case. How will this impact us buying a home together?
So there's a couple of different options there as well. So if we're looking at traditional financing, there are waiting terms that you have to do from a significant event such as bankruptcy. And if we put 2 borrowers on a file, or on a loan, both borrowers have to qualify. So it would either be one or the other. Now, there are some programs where we can do it day after bankruptcy, but the interest rate is not as good because it's not a traditional product and the down payment is a little more. So depending on, the urgency, how you feel about the property, whether it's a good deal or not, you've got to jump on it. There again, it's kind of a cost benefit analysis that the borrower, the buyer has to do to say, is this house really worth what I'm going to have to do for it?
Right.
And then make the decision really.
Okay, thank you so much to all of our presenters and all of our guests today. If anyone has any additional questions, feel free to share them with us, or I think Mary Claire is going to send out the recording from today, and we'll try to include the contact information for all of the presenters in that. So you can reach out to them directly as well if you need their services or if you have questions for them. I'm going to turn it over to Mary Claire or Justine to close and provide some information about United Way, what they have going on, and emerging leaders if you would like to join or get more involved.
Yeah, thank you, Haley, and thanks everybody for being here today. I cannot say how invaluable this lunch and learn was, and this information that y'all all hold. I just bought our second home, and the process was much smoother and less frightening than my first, almost 10 years ago. But because it's for people like y'all who help people navigate through these challenges, and like George mentioned, never can ask enough questions. And I will throw out there, if anybody is not ready, I know this is home buying 101, but if anybody still rents, renter's insurance is another great thing to look at. And the reason why I cite that is when I was in college in 2011 in Tuscaloosa, and the tornado damaged a large portion of the area, including our house. A lot of people were renting their homes in Tuscaloosa at the time, but didn't have renter's insurance. And the property was damaged and all of their personal property inside, but they had no insurance to cover that. So they were just out all of those items. And another nerve-wracking process for any insurance that you want to know what's in your house. I should do much better about keeping a binder of items, that we have, TVs and serial numbers and things like that, in case anything ever gets stolen. But obviously, if you wake up one day and a tornado hits your house and destroys everything you have, you don't expect to be asked to inventory every item in your home. So it's always a good thing to do before disaster strikes. Those are just two things from my personal experience about home buying, and I'm sure George can help with renter's insurance as well.
Absolutely.
And so for United Way, thank you all for being here today. United Way of Southwest Alabama, our mission is simple. It's to improve the quality of life in the community. We do that through four main ways. We serve the areas of health, education, financial stability, and access to life's basic essentials. We believe that healthy communities have healthy United Ways, and we're honored to be an organization. We've been here for 96 years to continue to provide services for people. And the way that we do that, we have 12 internal programs that we facilitate in those four areas. And then we also fund 46 partner agencies, which are nonprofits that a lot of y'all are familiar with: Penelope House, Salvation Army, Volunteers of America, you name it, to name a few. We fund them to operate programs that provide direct services for people in our 4-county footprint, which is Mobile, Clark, Choctaw, and Washington counties. And last year we funded 96 programs operated by those 46 partner agencies and directly served 207,000 people. And the way that we do that is through contributions from individuals and businesses. We partner with thousands of individuals and hundreds of businesses a year that financially support our community or volunteer or advocate. And our emerging leaders group is one group of individuals you met today, the steering committee of people that not only financially invest in our community, but they volunteer and they advocate for the work that we do. And so we're always looking for and honored to have more people join that. That's for individuals who are 21 to 40. And we're just looking for anybody to get involved, and they do. We're excited that we're able to kind of get back to normal. We're still doing some virtual, like their lunch and learn. Hope to have an in-person event before the end of the year where everybody can get together and socialize and meet, and not have virtual lunch and learns anymore, but continue to have hopefully some in-person events in the future. And I can't say enough about the importance of kind of getting involved in the community early. It helped my my career at United Way was started because I came home from college and started volunteering at St. Mary's Home with their Young Leaders program. And I just wanted to give back with some friends. We had it was a lot of fun, but we got to serve with the kids, have dinner, play kickball or games or whatever. And that kind of led me sort of down my path from service when I returned home from school. And so the goal of Emerging Leaders is to just help somebody find their passion, where they want to connect, where they want to get involved. If it's food, introducing people to great food like Chris and his wife do through their food tours, whether it's serving the community as an insurance agent or a realtor or a home inspector, all of the ways that you can get involved in the community or connect with people. We're excited to have diverse people on our team that bring opportunities, to more people, young people that want to get involved. So you can join, become a member. Mary Claire will send out some information in an email, I think, after this. There should be a link for a way to get involved and give. And we're looking forward to keeping everybody updated with some more events that we have in the future.
Yes, thank you, everybody. I will be sending out a poll next week and first talking to the steering committee to help them guide for the next Lunch and Learn, and that hopefully be in person. So thank you guys for joining us today, and thank you, Justine and Haley.
Thank you.
Thank you.
Thank you so much.
I learned a lot, and my husband and I are in the future housing market, so buying a home. So thank you for all the information. I'll be in touch very soon.
Yes, thank you so much.
Thank you.
Thank you.
Bye,
Bye-bye.
everyone.